Good morning, everyone. Let's talk about banks and why they're always aiming to grow. Banks are businesses, like a local coffee shop or a tech giant, aiming to succeed for their shareholders. To keep investors happy, banks must constantly find ways to increase profits. Growing profits allows banks to invest in technology, offer new services, and expand into new areas. This competition benefits customers with better services and lower fees. When a major bank like Bank of America announces a new plan, it's a big deal. They share their vision for becoming stronger, more efficient, and more profitable. Recently, Bank of America did just that, offering a fascinating look inside their strategy. On November 5, 2025, Bank of America hosted a landmark Investor Day at its global headquarters. This was no ordinary event. It marked the first time in more than 10 years that the bank had opened its doors to investors and analysts for such a comprehensive update. The anticipation was palpable, as the financial world waited to hear what one of America's largest banks had planned for its future. The event drew a crowd of top business journalists, market analysts, and industry insiders, all eager to capture every detail. For many, this was a rare opportunity to get a first-hand look at the bank's strategy and to ask tough questions about its direction. Leading the day was CEO Brian Moynihan, who has been at the helm since 2010. Over the years, Moynihan has steered the bank through turbulent times, focusing on stability and risk management. But with the financial landscape evolving rapidly, investors were looking for more than just safety. They wanted a bold vision for growth. Inside the meeting rooms, executives discussed new strategies and fielded questions from a room full of attentive investors. The mood was serious, but there was also a sense of excitement as the bank prepared to unveil its next chapter. The highlight of the day was the announcement of a multi-year plan designed to boost earnings, expand the bank's reach, and embrace new technologies. This ambitious roadmap included investments in digital banking, customer service enhancements, and a renewed focus on sustainable finance. Wall Street was watching closely. The bank's announcements had the potential to ripple across the entire financial sector, influencing not just Bank of America's future, but also the strategies of its competitors. The atmosphere buzzed with high expectations. Analysts debated whether the bank's ambitious goals were truly achievable and what they might mean for shareholders, customers, and the broader economy. Was this the moment that would redefine Bank of America's place in the industry? The details of the plan hinted at a larger transformation, one that could set the tone for years to come. Ultimately, this Investor Day was more than just a presentation. It was the story of a financial giant making a bold declaration. Bank of America was ready to compete for the top spot, determined to lead the industry into a new era of innovation and growth. During the recent Investor Day, one of the most important announcements centered around a financial metric called ROTCE, Return on Tangible Common Equity. This term might sound complex at first, but it's actually a crucial measure that investors and analysts use to judge how well a bank is performing. Think of ROTCE as a kind of report card for a bank. It shows how effectively the bank is using its shareholders' money, specifically the money that's left after subtracting intangible assets like goodwill, to generate profits. In other words, it's a way to see how much value the bank is creating from the tangible capital it actually has on hand. A higher ROTCE means the bank's management is making smart decisions with its resources, investing wisely, and ultimately delivering better returns to its shareholders. It's a sign of efficiency, discipline, and strong leadership at the top. That's why it was big news when Bank of America announced it was raising its ROTCE target to a range of 16 to 18%, up from its previous goal in the mid-teens. This new target reflects the bank's confidence in its ability to grow profits and manage risks more effectively. For investors, this isn't just a number, it's a promise. By setting a higher ROTCE target, Bank of America is signaling its commitment to delivering stronger returns and rewarding those who put their money into the company. Of course, setting an ambitious target is only the first step. Achieving it requires careful planning, disciplined execution, and the ability to adapt to changing market conditions. There are always challenges along the way, from economic uncertainty to regulatory pressures. Some financial experts and analysts have pointed out that while the new target is a step in the right direction, it could have been even more aggressive. They argue that in a competitive industry, aiming higher can inspire greater innovation and performance. Even with a target as high as 18%, Bank of America would still be playing catch-up to its main rival. which has consistently posted even stronger ROTCE numbers. This comparison puts pressure on Bank of America to not only meet its goals, but to keep pushing for more. Still, many believe the new target strikes a good balance. It's seen as both realistic and achievable, given the current economic environment and the bank's recent performance. It sets a clear direction without overpromising. Ultimately, this move sends a strong message. Bank of America is ready to move beyond playing it safe. The company is embracing a new era of ambition and growth, willing to take calculated risks to deliver better results. The focus is now firmly on driving higher returns, creating more value for shareholders, and positioning the bank as a leader in the industry. In short, Bank of America's new ROTCE target isn't just a number, it's a signal of a more dynamic, ambitious approach that could shape the bank's future for years to come. In the world of big banks, competition is fierce and relentless. Bank of America's biggest rival is JP Chase, a financial powerhouse that consistently leads the pack in profits, returns, and market influence. For years, JP has set the standard, often outpacing Bank of America in key financial metrics and capturing the attention of investors and analysts alike. This ongoing rivalry isn't just about bragging rights, it's a driving force behind Bank of America's latest strategy. Determined to close the gap, Bank of America's leadership has rolled out a bold new plan, aiming to match or even surpass their competitors' performance. A key part of this plan is their new ROTCE target, a direct and ambitious move designed to narrow the difference in returns on tangible common equity, a metric closely watched by Wall Street. But in the high-stakes world of banking, competition isn't just about hitting one number. It's about delivering strong results across the board. Profitability, efficiency, innovation, and customer satisfaction all play a role in determining who comes out on top. JP has built a reputation for excellence in investment banking and trading, consistently generating impressive revenues in these areas. Bank of America, recognizing this, is now making a concerted effort to strengthen its own presence and capabilities in these lucrative fields. By closely studying their competitors' strengths, Bank of America's leaders are signaling to the market, "We see what works, and we're ready to compete at that level." They're not just following, they're aiming to innovate and adapt. This intense competition between two financial giants pushes both organizations to constantly evolve. It sparks new ideas, encourages investment in technology, and ultimately leads to better products and services for customers. Analysts and investors are watching every move, comparing strategies, financial results, and even leadership decisions to see who will gain the upper hand. While many agree that Bank of America's new goals are a step in the right direction, some experts feel they fall short of a true game changer. The market's reaction has been cautious, reflecting a sense of anticipation rather than celebration. The bank's stock price dipped slightly after the announcement, signaling that investors are taking a wait-and-see approach. They want to see real progress before fully buying in. Still, there's a sense of optimism. Investors are encouraged by the new direction and the willingness to take on the industry leader, but they're holding out for concrete results and sustained improvement. Now, the challenge for Bank of America is clear: to prove that it can not only set ambitious goals, but also deliver on them, and truly challenge JP Chase for the top spot in American banking. A key part of Bank of America's strategy is expanding its physical presence. While online banking is prevalent, local branches build trust and attract customers. The bank plans to open new branches in 6 U.S. cities by 2028. This move targets over $222 billion in potential customer deposits. New branches serve as physical advertisements and centers for community engagement. They allow the bank to hire locally and build relationships face-to-face. This personal touch is something online-only banks can't offer. Every new customer adds to the bank's deposits, fueling its profitability. By expanding, Bank of America grows the engine of its profitability. This expansion is crucial for hitting higher ROTCE targets and steady growth. Bank of America is focusing on its high-stakes divisions: investment banking, trading, and wealth management. These divisions handle large sums and can generate significant profits. In investment banking, they aim to increase their share of fees from big deals. In trading, they target a revenue increase from 7.6% to 9%. In wealth management, they aim for 4 to 5% net new assets annually. This means attracting $135–150 billion in new client money each year. These divisions are essential for hitting ambitious new goals. By strengthening these areas, Bank of America builds a multifaceted plan. They aim to increase profitability from every angle. This strategy positions them to compete with top Wall Street players. Technology, especially AI, is a big part of Bank of America's strategy. AI helps answer customer questions, detect fraud, and analyze information. It empowers employees to focus on complex problems and customer relationships. The bank's focus for growth is firmly planted in the U.S. They have no plans for major international acquisitions. Instead, they concentrate on the U.S. market, where they see the most opportunity. They are open to buying smaller, specialized U.S. companies to enhance services. This strategy is about adding capabilities that improve offerings for American customers. It's a balanced approach, leveraging global technology while focusing on the domestic market. This approach ensures they remain competitive and innovative. It aligns with their goal of responsible growth and customer focus. CEO Brian Moynihan emphasizes responsible growth, a core philosophy. It means growing profitably without taking foolish risks. This philosophy was born from lessons learned in the 2008 financial crisis. The bank's success is tied to the overall economy's health. Fortunately, U.S. economic growth remains solid, supporting their goals. Consumer spending is up, indicating confidence in the economy. Stable consumer credit suggests low risk for lending. Responsible growth balances profit with safety and stability. It balances new technology with human connection. By sticking to this principle, Moynihan reassures stakeholders. The bank is accelerating but with a steady hand on the wheel. What does Bank of America's plan mean for you? It affects everyone, customer or not. If you live in a new expansion city, you'll have more banking choices. More competition can lead to better service and lower fees. For existing customers, the focus on technology could improve the banking experience. Even if you don't bank with them, their actions pressure other banks to improve. A strong banking sector supports a healthy economy. Banks provide loans for homes, education, and businesses. Bank of America's growth plan is a vote of confidence in the economy. It reminds us that high finance is deeply connected to our everyday lives.